Welcome to Marketmonkeys. Right, this week we're going to talk about banking because it's December, it's coming towards January, we want to talk about that. Right, let's get into that.
Get into it.
Okay, right. I've been reading a lot lately, and throughout the year, Scott, I've obviously bought in and out of a few banks in Canada, but we got new laws coming on, starting on the 1st of January, and I know a lot of
laws. Huh?
Well, the new law is you've got to have an X amount of extra money that you can afford to pay if the interest rates go up. It was at say 2, but it's now going to be jumping up to about 5. A lot of people are going to be excluded from getting mortgages there, so obviously they're going to switch to alternative lenders, which is good if you own companies like Equitable or HCG, which I do. Okay, but the mainstream big 6 banks in this country, they've all had a good run this year. You know, not massive. They've all gone between 7 and 15% growth, right? Which is great. But this is my take on this. Yeah, come January the 1st, things are going to change. And they will.
What's changing?
Well, that new law coming in on the 1st, right? Which I just told you about.
Right, but what's the percentages? How does that work exactly?
Nobody knows what this is going to actually be. But as soon as it does change, it's not going to. Say you've got 100 people that can afford the mortgage. It's going to take a certain percentage of that down, and whatever they lose, it's less revenue, right? So I predict that my personal prediction for the beginning in January or the beginning of February at the latest, that the stocks in the big six banks is going to take a dip. That's what I think. So there could be a buying opportunity.
Yeah.
And if I'm wrong, I'm sure somebody will comment and tell me, which I'd like, because if I am wrong, but I just feel that this is going to catch people. And because especially when I've looked at some of the stocks recently, like I've looked at CIBC, in the last 2 to 3 weeks, they've gone from say like $113 a share. They've been as high, well, they still are about 119, 120 something, very low 20s. So, you know, they've had a little bit of a good run, just surging up towards the end of this December. But that date of the 1st of January is coming, and we'll see where the mortgages go from there. And that's what I see as a problem. So there could, and when I say it's a problem, I see the dip coming. And when I see the dip coming, I mean it's time to go in and buy.
Well, I would hold off there because Canada is definitely one of the highest indebted countries in the world.
Oh yeah. Yeah.
Is it one of them or is the first?
We are number 1 at something, and we are the most in debt individuals in the world.
Yeah.
Nobody's got more debt than us, and there's nothing to be proud of,
We're
which
lucky.
is a shame.
Lucky guys, yeah.
Oh no, we're not lucky. But it is a shame, but that's the God's honest truth.
So more than likely then we're going to be the next ones to be having the recession.
It could come our way. Always good, as I've always said in previous episodes, keep some money cash back. Because there will be at some point a correction, or I don't want to say a recession, but correction, so that provides opportunity. And I'm always looking for opportunity, as you well know from my previous documented episodes. But they will come, and I don't know if it's going to be this year, next year, but like apples.
It's going to happen.
It's going to happen.
Yeah, I mean, you know, most indebted country, I mean, that's going to be the next one. I mean, when America was the most indebted, that wasn't long before they had their big crash.
No.
And everybody's talking already about the big bubbles happening in Toronto and Vancouver, Montreal with their housing.
Yeah. And we're the most in debt with the credit cards.
And credit cards, things like that.
Which is unfortunate, but that's the way life is, right? And we're in that position. But that doesn't mean, for me personally, I'm thinking, and I'm saying to you is, with this dip coming in January, there could be an opportunity to pick up some stock. That's what I'm saying, Scott.
Okay.
That's my thought, not yours, and mine, all right?
If this happens, what I would say to do, just relax, let it happen, and wait for the dip to happen. Don't try and catch it on the way down.
No, let it hit the bottom.
Yeah. Because if that happens, it may be a trigger for some other things. So take your time with it. You don't have to rush in, you know. Only fools rush in, as they say.
Well, I'll tell you what, if it does take a dip, we'll be both in it, and we'll be on here giving you an episode, and we'll bring it up again very quickly. And if I'm wrong, you'll never hear from me again. Am I joking? Listen, if there's anything been any use to you today, subscribe. And if you've got any comments, talk to us.
Ask
We're
my
willing
dad,
to-
Dave.
And Scott can answer anything
He
about
can
you. If
answer
you
it.
want financials, let's go. Let us have it. We're ready to answer all your questions.
You're ready.
I'm ready.
Yeah, good.
I am ready.
Good. Do it.
Hey, over and out. Talk to you soon.